learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in of February 28, 2020, and the stock market just cracked. The Dow closed down 4.42%, 1,190 points. This was even bigger than what we saw at the beginning of the week with the gap down, and pretty much this is not looking good for tomorrow. This is one of the biggest weekly declines since 2011. Again, as far as single point drops, this is very, very big, but percentage-wise, it's not the biggest. However, we are approaching a danger zone, so that's what I want to talk about, because coming into tomorrow, it is looking like a bloodbath, simply because if people were already heading and rushing to the exits today, usually most people aren't going to want to hold over the weekend, especially with all this stuff happening. So we have a lot to talk about, and I have a bunch of plays to go over. The ones and all the moves that we made today, we still made out pretty good despite the volatility. However, there is still some plays that we can make and some stocks that have not even dropped yet and that are very, very lagging behind the market. And we also want to set up and have a strategy to play not only the bounce, but everything that's happening with all these option premiums. So I got that for you. I got the keys, all that good stuff. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It is free to join, costs you free $99. You could watch the stock market live. We were documenting all of this, making the plays in real time, getting the news in real time, everything. The people were chatting. All we ask is you are positive and respectful. YouTube.com/thestockmarket. And thank you to everybody who has already been positive and respectful. I love you guys. I appreciate you guys. Hopefully you've been doing good, at least at the very least learning something. And for everybody, there is really no need to panic. So make sure you are chill. There is opportunity. Again, if I have to remind you guys, given the nature of this news, it's slow absorbed news. So you're going to see things move a little different here. So don't be short-sighted. But, oh wait, don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. If you got any plays, comments, remixes, what did you play? Post them all below, baby. We need to source that info. Okay, now we can get into it. So watch out for the laggers and leaders. TLT, bonds, oil, won. We've been talking about that again with the currencies and putting them there. However, for tomorrow, it's going to be a bloodbath. You know, take notes from today's move and what we saw. It might look something like this. It could be a gap or drop. Essentially, I don't care how it looks like tomorrow. Given the nature, you're most likely, again, and hopefully we get surprised. But for the most part, if people were running to the exits today, they're not going to do so over the weekend. So that's going to even set us up more into next week. Now, I will say, I was wrong yesterday, but actually, no, there's no way. I'm not even going to try to bend or twist that. I was expecting the bounce, and even though I did say look till next week, my drop and then bounce and then drop again theory, it's still in play. So the fact I was expecting to see it yesterday for the same reason why I think the market is going to go down tomorrow now, because I was expecting a bounce to kind of ease off and then see a big day as people head to the exits, but you're getting back-to-back. They sold off today, so tomorrow, again, the odds are not that high, but we will see. Anything could happen, especially with all this, with this type of news. But essentially, what I'm going to be doing, what I'm going to be looking for is just ride the wave until Monday. We have all those puts, so again, even if I was expecting that bounce to lead to another drop, like I said yesterday, I had mainly puts, so we were able to just profit off of that, and then I'm riding those through. So now I'm going to hold what I have, and then if I could find low premium small entries to grab, kind of like the ones I have and that I'm looking at for tomorrow, then those are the plays I'm going to make, and those are, and there's still actually a few on the table. So if you haven't got in the game, baby, pay attention, control the budget. Don't force it, because like I'm saying, this is going to come into next week. So even if there's nothing to grab tomorrow, if it's out of the budget, it's too much, it doesn't offer a good risk reward, we're just going to go and play this next week again and maybe try to find getting in on the bounce. And that's something I'll tell you guys, anybody playing the bounce, even trying to get to time the perfect put, you don't have to be perfect with options. Again, we're moving fast. The thing I'm worried about is when it slows down, because that is what's going to kill and crush option premium. So besides that, though, tomorrow's going to be a good day for some of those crazy $20 plays. You got to be smart. Don't get carried away. I'll be praying for you again. We're going to keep it small with some stuff. If there is a big, another 800,000 point day, but the fact it being Friday, and then we're going to get an expiration, hey, it's going to set up for a Froggy Friday. I'm going to be excited for that. Again, be smart, be responsible with it. Do not force even those, but there's going to be opportunity all around us. Be careful even with your contract premiums, especially as we come to the end of the week too. So keep that in mind. If you're not in the money, you're going to lose on that if it expires tomorrow. But that's pretty much it. We made a lot of plays in some that we entered today. So I guess let us get into the plays. I'm going to start with the plays in order that we made them. I don't have them written down because we made a lot of moves, but I want to go in the order again so you could see the logic and the timing of how, I was buying stuff and then selling. So again, right in the morning, that is going to be an opportunity, and that will be an opportunity tomorrow, but only if the contracts have time. However, usually, we're going to have up until the European close. So keep that in mind making those plays. But if you're going to play any weeklies tomorrow, you want, some might be good off the morning if there's a big move and it doesn't recover. However, towards the end of the day or middle of the day, as we get that decay on the daily, that's going to be the most opportune time to gamble. Keyword gamble. Be careful. And hopefully you guys understand too. Option trader is shilling risk. You can lose ultimate financial investment. Please don't financial purpose only. But the first play that we made this morning, April 17th, J&J, I grabbed a 115 put, and we grabbed these at 31 cents. Damn, they closed up very, very high. So they went up pretty much almost instantly, and this was something, again, this one was a very, very unique thing because was it that the Colt came in and bought it? Not necessarily, because the contracts below it at every single level, they all did the same thing right at that moment. Pretty much, if you guys even go watch the chain, you could even do TD Ameritrade flashback, there was zero volume on any of these options in the morning. It was actually quite phenomenal. But pretty much all at once, within like 10 minutes after the market, they all started to pop up. And this is a phenomenon we saw with earnings. And like I said, options are going to start moving crazy like that. But why did I get these plays? Like I said yesterday, price is going to speak more to me. Fact was, we got them at 30, but ever since Monday, the only trades that came in Monday, Tuesday, Wednesday, these contracts were going for like 13 cents. So we bought them at 30. It is a little higher, but I kind of was like, 13, like 15 cents, slightly above 100%, but that's better than, again, buying contracts that are up 300 to 900%, considering what's going on. And then, like we said, we want to go after J&J. I wanted more time. I wanted to wait for them to bounce. However, these were some of those more stable stocks that have yet to kind of really get killed in the midst of this. And again, look at December. J&J really got hit. They brushed off a lot of stuff, but when they get hit, they get hit. These are kind of the last ones to go. So I grabbed 15 of these at 31 cents. We spent about like $460. But then shortly after, this is what I did again. The last time this same phenomena, especially if I buy a decent amount of contracts, $400 at the time, there is still risk on the table. This is what I've been doing with every single play. I've been just getting my initial investment back, but instead of flipping it, we ghetto spreaded it. So I had 15 contracts, and then these 110s, they shot up in value. You see, they're at 37 cents. You could still ghetto spread that play right here, right now, even at the bid. That's not the ask. But these shot up to 43 cents. So I sold 15 of these and I shorted them. $5 difference. The fact that I had a lot of contracts. So $500 per contract at 15. I was able now to get my initial investment back. And I even made 50% profit because I sold those for $640. So I was able to make just about 50% on that. And then now that play has a max gain of 7,500 and we have that until April. So that was the first play that we did in the morning. I would watch the J&Js whenever there is a bounce because these are still really far at the money. These might be ones that will depreciate pretty quickly because, again, they still have premium, but not as much. But I would say it is late to get into that play. Then the next thing that I did is I had Ubers. So you guys remember, this was the same time we got those first UALs. Those UALs were down 70%, then they came back up. These Ubers were still in the gutter. So I had 50 of these March 20th Uber 24 puts. You guys remember that? So I bought these. I got 50 of these at 4 cents. So I spent $200 for this position. So that was a pretty great return there, but it still had some time. We've seen what's happening with the travel stocks in general. I think Uber's a different tier, so I wanted to hold them. So what I did was I sold 15 of them at 18 cents. I got $270 back. We spent $200. I got all my money back, and now I have 35 contracts for free. So after we took that J&J trade, I went and I took some profits, and then we waited some more because, again, we are riding the wave. So this is essentially What I'll be doing tomorrow, depending on how it is, maybe probably take less profits. Again, I'm taking a lot less profits than I was the last few days because now we have made most of these completely free, or I've ghetto spreaded them with a profit or a big return. So the next one was Expedia. This was an old earnings play. If you guys remember this, we bought these $90 puts and they shot up to $400. So I got out at like $380 kind of on the way down there. But these were just at 40 cents. Again, even yesterday they shot up a lot, but a few days ago, beginning of the week, these were still kind of in the gutter, which was very, very surprising. They were even at 7 cents at one point. So that was very, very nutty. We got those Expedias out. We took another $400 and then the UNHs. So these plays, you guys remember, we did this at the beginning of the week. So even after the big drop on Monday, this one is now related to the Bernie Sanders stuff. Because again, like I was saying, yes, the market is reacting to the coronavirus stuff. But a big thing that was happening here was Big Bernie over there and the Democrats. Even Trump mentioned that, and I agree with that. That's why we went to the UNHs, because they were outpacing the market. So we got that 235. You remember that? We bought it at 60 cents. The other day. Those are now at 325, 460 on the ask. So what I did was I ghetto spreaded them because they expire next week. Even though we're pretty close, they have a lot of profit. It was a good one, and I did that on the small account. So I shorted the 225. So the best part about this, we were able to go to the 225, make it $1,000 max gain. I shorted that for $220. So $60 to 220, just under 1,000% there on the ghetto spread. And then we still are able to hold the play in the midst of everything. Let's run it up, baby. So we got that one, and then the Intel. So this is the one that we already owned. And now again, you guys see, in the midst of this, the market was dropping. Why I decided to ghetto spread or sell a lot of these, because the ghetto spread when premiums are high, that's actually the best time to do it, because you could still keep the play and then short those other contracts that are worse and collect a lot more money. So these were the plays that we got yesterday. Remember, same strategy with the premiums being too high. These were the Intels, or the premiums not as high. We got these 47s. We bought these yesterday at like 30 cents. So they went up like 100%. Not too bad, but they went up there. But again, as the premiums were high, I went and I ghetto spreaded the 45. So the fact was I had 5 of them, $2 difference, $1,000 max reward. This was also on the small account, but I was able to do that, and I shorted these at 40 cents. So we spent 150, got back 200, made $50 profit, but then now we're still in the game there. Then we had the Amazon. So this was another March 6th that we held. We did that strangle. So the put went down, or the call went down 50%. But remember, we got these like 1640 puts. They were pretty far at the money, and now they're pretty decent. Damn, those closed at 845. Whew. I sold these out at 670. So we spent $300 both ways. I got 600, made it double, but now we still have the call. That play was a little risky and pretty far at the money. I wanted to lose that one anyway, but still able to turn a nice profit. Then those Rokus at the beginning of the week that I swapped out instead of the Boeings, I finally sold them. They expire tomorrow. They were the 104 puts. They were going for $2, so I got $200. They came down again, but we should have ended up keeping that Boeing. If you guys want to see, I decided, oh my gosh, I don't even want to look at that. Oh man. We had the March 20th 285s. You would be at the money $1,100 from $80. Oh. So you guys could see the difference. Sometimes some stocks move more than others, but we got clapped on that one. I thought Boeing would get more stability, but I guess it seems like Boeing had a little bit more risk. I thought people would sell off Roku, but we were wrong. Still got to come out with a profit, but not as much. And then again, man, another one. As you guys see, this is when the market's going down. By this point in the day, it's about 752. So it's like 1052 off of that first bounce there. We've came down a decent amount, and then I sell the McDonald's March 20th 175 puts. Remember, we bought those at the bottom. I was able to sell 3 of these at $1. They went up to 138 to 252, $1.84 last trade, but I had 5 of them. I got to keep 2 of them for free now. Got our initial investment. These plays were even in the gutter at one point. And then we had the HYGs. So TLT even outpaced, and we still have all those TLTs even from the beginning of the week. But remember, we got the HYGs. I forgot these were May puts. I kind of wanted to keep them a little longer, but again, I just felt the premiums have just already ballooned so much. But we got these May HYG 83 puts. We got 10 of them 2 days ago, and we spent 38 cents each, so they were at $1.11. So I sold half of them, sold 5, got our initial investment back plus 50%, and then we're just riding this one all the way through to May, made that one free. And then now, this has to do with the strategy with calls. I started to do some credit spreads. So my logic was here, here, a lot of people, again, even I was expecting the bounce here. So as the market was up, it started to bounce. Well, I said, or actually, no, we were even at the bottom. My logic was pretty much this: even if the market did bounce, I know that when the bounce actually does really occur, the contracts here are still pricing a lot because of the spread. So I sold the credit spread for March 6th. This one has a 70% probability, but it's a low credit. It's pretty much a $180 risk to make 70. I did this on the small account. March 6th, I sold one 272.50, and then I bought one 275, collected 70 cents. The whole idea here is if by March 6th, NVIDIA is not above 272, we will get to keep that $70. Again, it has a higher probability, but then this way, it allowed me to get a safer play, because even if the market did start going up there, I knew that once the volatility kicks in and there's even one more drop, that will kill the contracts, and you'll see what happens to those even tomorrow. And then I even went for the long-term account. I sold a covered cash secured put on Snapchat. So I sold one of these March 1350s at 41 cents, collected the $41, then I instantly bought 3 shares of Snapchat with it. We did the Ghetto dividend. And then we got to the Facebook credit spread. So these ones, I gave them a little bit more time. March 20th, we sold the 202.5, bought the 205, collected 75 cents. So again, another one of those $180 risks to make $75. But this is pretty much same logic of shorting the volatility, still about 75% probability. And it's actually even what the market makers are pricing in. So it's actually just right under that one standard deviation mark. And then finally, we did earnings plays. We had VMware, and even though VMware, they had earnings and they dropped, we got this 110 put at 50 cents. And then they actually even shot up, even coming into earnings as the stock dropped. We bought it when it was actually up like 2%, and then the stock really dropped, and now earnings, even though these were far at the money and had a lot of premium, I still think these are actually going to hold up tomorrow, given the fact that it's dropping and then even the overall market. So that's something unique about earnings. That's why I was kind of down with playing some of the bigger puts, and even then I played a buy-do for earnings afterwards, and I put a lot more into it. And even though I cut them at close, I wanted to make it free. My idea was we were buying them here even into close, playing the end of the day run up mixed with this volatility. Even if the market goes down, we would have found a way to benefit. So we're still holding the VMwares. We'll see where those are at tomorrow. Then we got the April 17th Baidu 90 puts. I got 20 of these at 60 cents. And then at close, I sold 15 at 80. So I made like 50%, got my initial investment, was able to walk away with 5 contracts for free. And then I also did it with the 165 calls, but it didn't work the same way because it dropped so much. I was trying to play the IV run up. I bought 10 of these at 50 cents, but then it went up a little bit, but as the end of the day came in, they started to drop. So I sold half of them. I sold 5 of them at $40 because, again, I trimmed this position, made that for free. So I didn't want to hold more in calls than puts there. So I trimmed it to $250 of actual risk, and then I took $50 back, and I literally got the exact same price that I paid. And then finally, I got beyond plays. I decided to hold the calls there. We were already down 50%. So I was like, well, I've already held it this long. There wasn't an opportunity to try to finesse it. Good thing we didn't try to, considering how the market turned out. But they beat and guided upwards, but they still dropped. But we did. I said, since I have those plays and it has so much money into it, I might as well put a little bit. I put $75 into puts. We got March 20th, 65 puts. Still holding those. Bought those at 38 cents. This wasn't a big drop. There is usually IV with Beyond, so we have to see. But again, I think any of these puts with earnings might hold up a little bit better. And then finally, this was the last play. You might be able to see this tomorrow. And now this is one of those plays, and I'll tell you guys the other plays I'm going to be looking for coming into tomorrow. But Netflix, we got this at close, and I was thinking about it earlier in the day, and I didn't. But at one point, Netflix was up 4%. The logic is that people are going to stay inside and watch Netflix, and I agree with that. However, it doesn't change the fact of the finances there. Essentially, is somebody going to want to hold a growth stock if people are rushing to the exits? Or now, if you have stocks that have gains and now you're losing on some, to make up for it, people might start going for the companies that have gains on there. But in general, I think this has risk, and that's the next wave. Essentially, if tomorrow is a bloodbath, what we are going to start seeing is the companies that have held up a little bit better. I have another company to show you that I haven't got yet, and that's kind of why we bought Johnson & Johnson, but I want to look at this company. But Netflix was one of those. So the contracts were still a little expensive, but I like the fact Netflix is a big mover, and it still has, it hasn't dropped as much as some of its other peers. So especially when you put it up on the daily, they could drop a lot more. Most companies have already came back down to their December, October levels, not Netflix. Did I say Snapchat? Anyways, yeah, we're talking about Netflix. But I got the April 20th. Again, hopefully you guys see I'm getting time just in case. So if they do move up with a lot of time, we can flip them quick. If not, and even if we go down 50, 60%, we could just hold these. And then if the next wave comes in by April, hopefully we will be good. But I grabbed a 225 put, bought this at 70 cents, only got one. The good part about it was that 2 days ago it was at $30, so $33. So even that Monday, Tuesday, and everything, even yesterday was at 40. But if we bought it at 70, we only paid a 50% or 100% increase, which isn't that bad comparatively, again, to some of these companies with 900, 1,000% gains. And that's something too. So if you guys even remember those SPY plays, the IWM, those crazy YOLO insurances, those are all up about 1,300% right now. So we made those free even at the beginning of the week. We still get to hold those. So congrats if you hit those. But now, finally, the other play I want to talk about, I'm going to be looking for them, Clorox. So they've been good. They've been killing it. People usually rotate to them, and you often do see that. But essentially, if the sell-off starts to continue, or even when the bounce starts to form, they're going to come to the chopping block eventually too. So now I think the contracts are going to be cheap, and that's something to notice here. Clorox has only been going up in value. They still closed up 1% today. But what do you notice about the puts, my friends? They're shooting up 30%, especially on the ones out the money, but 46% on some. You're seeing a rise in the prices here because I think there's other savvy people who know this is coming. So keep that in mind. I'm going to look for a play for that. We're going to watch out and see what happens, but you keep an eye out for it. If you got a play, call it out, baby. But besides that, we got to look at all these other plays. So these are all the plays that we made today that we already went over. I'm going to be watching those. I think earnings continuations are going to be good. HYG, watch Amazon. Again, we sold out of that straddle, but all of these plays are the ones we made moves on. Again, and pay attention even to that credit spread strategy. If you don't understand that, check out our videos. But as you see, these are every single play that we made on both of these charts. We have a position in all these. So hopefully you notice by now, we've made a lot of them free. We have exposure, and then we're also sitting on profit. So the key from here now is moving forward, riding the wave, but also, like I said, setting up for the next wave. And that's where we're going to watch where the Fed comes in. And that is what I think is next. You know, the next real, there's a few pop-off indicators. One, even another double black swan, I would say, would be if we see an emergency rate cut by the Fed. So keep your guys' eyes out for something along those lines. But I think the market, the timing-wise for that stuff to happen, that would be very premature for the Fed to respond now, especially with the meeting 2 weeks away. So we might not hear anything from the Fed. If anything, it's going to happen tomorrow or this next week. Then the Fed blackout period comes. So keep that in mind. But watch them. Again, Clorox, I like another one of those companies that has it kind of declined today. I need to check the prices. But Coca-Cola, however, if Coca-Cola could even start coming down a little bit more, they could even be good for the long-term stocks. Again, we went over the Snapchat. We're still holding the UAL and travel, and be careful with them too, because now they kind of bounced a little bit today. The premiums went up, but not as much. Travel stocks have already been battered down so much that they kind of took less of a gain than anything because they've already sold off so much. So watch how they move. Watch for the laggers and leaders. Even 3M now, I am even going to, that's another company to watch. They went up today, but they sold off. And that's what you'll start seeing by the end of the day today. When things really got bad, it didn't matter who it was. You started to see the bigger names start to sell off, regardless if they've bounced or not, have been rotational names or anything. So keep that in mind. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. You better keep that helmet on. Control the budget, baby. Be wise. You just need to stay alive. Do not be short-sighted again. I'm going to remind you, and if you didn't get anything, don't worry. Your time is coming, baby. The market's moving fast. By the time you're done worrying about what you coulda, shoulda, woulda, there was another play that you already missed, baby. Don't fall asleep. You don't have time to soak. We'll look back at this maybe in a week when things calm down, and then we'll go from there. But till then, you got to keep your head in the game, baby. Let's go.